I hereby introduce to you Mr. Michael Veazey.
Ladies and gentlemen, welcome back to the show. This is your host, Michael Veazey. And today I'm going to be continuing with our line in misleading metrics. You've been kidding yourself and other people have been kidding you too. Stay tuned. Starting a business on your own can be lonely and worrying. Selling online multiplies this issue tenfold. Getting expert help is a great way to reduce anxiety, wasted time, and confusion. The Amazing FBA mentoring program is in its 4th year of helping sellers to get started on Amazon. By now, we have former clients who have, starting from scratch, done 6 figures and even in one case 7 figures a year. Obviously, these are not typical results. These are exceptional people. Nevertheless, we can help you get launched faster, safer, and with a much higher chance overall of success. With clients from Melbourne, Australia to Manchester, England, we bring a genuinely international perspective. To find out more, go to amazingfba.com/mentoring. Thanks for listening. This is the third in a series called Misleading Metrics. We're talking today about revenue versus gross profit and what we would like to call the true top line. I owe a lot of these concepts, well, 100% of these concepts, to Greg Crabtree, who is a CPA, that is a professional accountant in the American system, who specializes in working with entrepreneurs to make the accounts actually make sense to them and to use that to guide them to run their businesses in a profitable, sustainable and safe way. So Greg Crabtree, fantastic book, definitely worth getting. It's a book called Simple Numbers, Straight Talk, Big Profits. I can never remember the damn title, but it is exactly what it says on the tin. I kind of feel like if I were writing with him, I'd rewrite the name of the title. But as a subtitle, it tells you what it does. Simple numbers, straight talk, big profits. So part of that is really, really very, very important, which is what the hell do we mean by revenue? Now, first of all, if you're very new to the business world, it's the same thing as turnover, same thing as sales, same thing. So let's not stress about that distinction. Doesn't mean anything. But if you're an experienced business person and if you're trying to go into e-commerce, you need to get your head around business, then this will mean a lot. E-commerce, Amazon is a subset of e-commerce. E-commerce is a subset of commerce, in other words, business. So you cannot avoid basic business disciplines. And anyone who thinks that Amazon works in a way that bypasses basic business disciplines is absolutely on drugs. It's the opposite. Amazon accelerates and accentuates the basic disciplines. So you cannot afford to wander around Amazon like a lamb to the slaughter waiting to figure out business. So let's get to it. Amazon or e-commerce doesn't exist in isolation. Right? You're normally, especially if you're in early stages, but even if you've got a business that's very established, you're normally trying to compare different businesses, different business models, or different investment models as well. So I know somebody with a business that's several generations old and deeply committed to e-commerce and Amazon, but they also have a property portfolio. So nearly everybody has some different things. They might have a pension fund, property, or they might be considering a completely different business if they're in the early stages of checking out Amazon. So you really, really need to have some comparisons that make sense. So let's talk about a thing called pass-through costs, which is a concept that Greg Crabtree is very big on, and I think absolutely rightly so. In e-commerce, a lot of your revenue numbers are really what we call pass-through costs. So that's similar to other businesses like the construction industry, for example, where if you're a contractor, you're going to spend a lot of money on bricks and employment, labor, for example, but the cash flow of it may be such that you'll basically just receive the money from whoever's paying you and you pass it straight on to those guys. It doesn't really belong in your true top line. So if you think about Amazon, you pay Amazon and then it pays you your revenue, but only when you make a sale. So we see this literally within the mechanics of Amazon payouts. We receive an Amazon payout every 2 weeks, which is equal to the Amazon revenue net of Amazon costs, including sales and fulfillment costs. Now, this isn't just a cash flow thing. It does reflect actually a profound difference in profit and loss and accounting. And before I go any further, talk to your accountant. First of all, I am not an accountant. I am not a CPA. I do not claim this is accounting level professional advice. Also, your situation may be different. But the other reason I'm saying that is not just to cover myself in case you decide to sue me for something, but also because you must talk to your accountant more often, because accountants can really, really help you run your business, but only if you understand the numbers, which is Greg Crabtree's passion. He's an accountant who really wants you to understand the numbers. What I'm trying to get across from an entrepreneur's point of view, I'm not an accountant. just to get back to this, but the difference with the Amazon payout is not just a cash flow thing. It reflects a big difference in profit and loss. Effectively, we just have money coming to our hands, which we immediately pass on to Amazon before we even get it into our bank accounts. Whether or not it comes into our bank accounts doesn't really change the fact that we're basically passing money straight from one place, the consumer, to another, in this case, Amazon. So in this case, we're passing a percentage of our gross revenue back to Amazon directly in the form of Amazon costs. So let's work through an example. Let's say a business has just one SKU or one product line to keep it simple. If, for example, you sell 10,000 units of a widget per month at $10 each selling price, that's a gross revenue of $100,000 per month. It sounds a bit unlikely to have it from one SKU, but it's the same principle. So you might say 10,000 units per year, whatever. Don't get hung up on the specifics. This is just an example. Most of those costs are arguably pass-through costs, i.e. they go straight much to other businesses that supply yours. So, for example, let's say the gross revenue is $100,000, 10,000 widgets at $10 each, whatever. $20,000 is your manufacturing cost. That goes to your factory up front. $10,000 goes to your freight forwarder up front, and $5,000 goes straight to Amazon in storage costs. Now, you've got a couple of other costs there. You've got fulfillment and sales fees, let's say $35,000, about a third. That goes to Amazon only while you sell something. So let's say out of this, we've got another $10,000 in ad costs. So your gross profit is $20,000, right? Now, if you compare business models, this may sound wrong in isolation to say that your gross profit is your true top line. But let's compare business models. Let's say that you own a traditional e-commerce business, that you buy physical products up front and then you sell them later, and you want to sell in an agency situation instead. Now, typically in an agency, the owner will not have to invest upfront for product costs, nor have to pay Amazon fees. They'll typically take a percentage of sales or a percentage of profit or a percentage of cash flow, plus maybe fixed fees per month, right? So let's say this agency business made a revenue of $40,000 a month, while the traditional e-commerce business made $100,000. It's tempting to see the agency business as a smaller business or maybe less successful than the traditional e-commerce business because $40,000 is less than $100,000, right? Leaving aside the obvious issue of profits versus revenue for the moment, which is a different issue we'll address in another podcast, let's examine what we've just said. So the agency monthly gross P&L might be something like this: $40,000 in revenue, minus $10,000 in in-house labor costs, managing listings, $5,000 in in-house management costs, maybe that's you, the owner, and $5,000 in advertising costs. So total costs are $20,000, and the total gross profit, therefore, is $20,000 gross profit, right? So the two businesses have very different revenues, but the same gross profit. With me so far? Gross profit is revenue minus direct costs. Like I said, if you're brand new to business, this may be over your head. Don't worry about it. But if you've been around for a while on Amazon or other businesses, you really, really need to think this through. And if all I do is prompt you to read that book by Greg Crabtree, I've done my job, because that is where you're really going to get to grips with this intellectually. So if you're comparing two top lines, the e-commerce business that's doing $100,000 in revenue, but $20,000 in gross profit may look more impressive up front, but the gross profit is the same as the agency. Greg Crabtree's contention, as I understand it, is very simply that the pass-through costs don't really count towards your business's top line because they're never really yours to start with, right? So in the Amazon business, the Amazon fulfillment fees and sales commission costs are only incurred and paid when a product sells. So effectively, they go straight to Amazon. And in fact, that is exactly how we experience it as Amazon business owners. The Amazon payout is made of revenue on Amazon minus the Amazon costs in each period. So some of those costs are incurred up front, like the storage costs, and the advertising costs come out whether or not you make sales. So they're not strictly direct costs. But if you are paying Amazon seller commission fees and fulfillment fees, they only come out when you make a sale, and they come out almost immediately. So you're basically just passing that money straight through from the customer to Amazon. It's a pass-through cost. So now, if you want a simple version of all this stuff, this sounds very complicated, and it does take a bit of getting your head around. Doing podcasts about numbers is not always that easy. You can look at the show notes, which I'll put up, so they could be a lot easier to absorb that way. Probably go to amazingfba.com/blog, or if you look for Topline in the search function, you should be able to find it. So that should help you. So where was I now? The simple version. Here we go. Simple version. Greg Crabtree who, remember, is a very experienced CPA and works with small businesses that are scaling fast. So he's an expert in the kind of area of the sort of businesses that listen to this podcast, right? His rule of thumb is very simple. If your gross profit is under 40%, you should use gross profit as your top line number, not gross revenue. Right? That's not universally accepted by any means. And of course, if you're bragging in masterminds or talking about it on a podcast, it ain't going to sound so impressive. I'm sorry about that, but it might give you some sanity checks in how you view your business. So viewed through this prism, at $10 million a year Amazon business, that is a year doing $10 million a year in gross revenue at 30% gross margin, which would be actually pretty standard or even quite good for a serious sized business, would in fact be seen as doing a $3 million a year business, which is more humbling. But if you're comparing that to other business models or investment opportunities, that might give you a much better sanity check. So coming back to our simple example again, just to wrap up on this, your e-commerce traditional private label type business. So you pay your money up front for a product, you stick it on Amazon, and at that point you pay the Amazon seller fees as well. And then you wait around. When you get a sale, you pay Amazon your sales commission and your fulfillment costs if you're using FBA, right? So those are what I call the pass-through costs. So really speaking, I would say your gross profit of $20,000 should be compared to an agency making $20,000 gross profit. And actually, the agency might prove more profitable for you, which, if you think about it, is kind of obvious on one level because you're not paying for physical products. But the other aspect that you need to think about is these pass-through costs, because money that you just almost doesn't even touch your bank account, or if it does, it goes straight back out again, is, according to Greg Crabtree, a questionable thing to really count as your money ever in the first place. Like I say, this is a sophisticated concept. I'm just kind of whetting your appetite for this, or hopefully kick off some interesting discussions, because it's the sort of thing that people get quite passionate about, and rightly so. You need to really think about what you're measuring. Like I said, the Misleading Metrics series is there to really provoke you to think about not only should you be measuring, and the answer is absolutely unequivocally, no argument, yes, you must measure things, but the question of what you put your focus on is critical. Remember, where your focus goes is where your money comes from, or where your focus is what you're going to grow. So if you focus on the wrong things, you're going to grow the wrong things. And I'm just going to wrap up by saying it's such a common scenario that I see all the time, that Amazon sellers up to and including $1 million a year sellers that I'm talking about revenue now as a measurement do good gross revenue. Their gross profit, though, can be pretty small, and their net profit can be small or non-existent. Now, profit is your net profit or your pre-tax profit is a different question again. But even before we get to that, the gross profit is a sadly neglected number, normally in the middle of your profit and loss statement. And I'm here to fight for you to take it more seriously. Thanks so much for listening. Hopefully this has been thought-provoking. If nothing else, if it provokes you talking to your accountant more often, we've done a great thing. Thank you so much for listening. Speak to you soon.